As of 9:40 Eastern Time, November 7, 2025, shares of Rezolve AI, trading on the Nasdaq under the ticker RZLV, are in a catastrophic freefall. The stock is currently trading at $3.61, a staggering 16.7% drop for the day, or a loss of 72 cents from its previous close. This isn't just a mild pullback, it's a full-on rout with the stock gapping down at the open and carving out a new intraday low of $3.57 on significant volume, already surpassing 1 million shares traded just minutes into the session. And the most jarring part of this picture isn't just today's collapse. It's the fact that this billion-dollar company, which is what the market is valuing it at, is trading based on a narrative that is almost completely disconnected from its current financial reality. The expectation is that Rezolve is a first mover in a new category. The reality is that its financials are, to put it mildly, terrifying. The market is currently grappling with a story that is almost too perfect and a balance sheet that is anything but. The common belief, the story being pushed hard by the company's own press releases, is that Rezolve AI is on the verge of cornering a new market, Agentic Commerce. This is the idea that AI-powered agents, not humans, will soon conduct most online transactions, autonomously reasoning, deciding, and purchasing on our behalf. The company just received what it considers a massive validation, with Amazon's CEO Andy Jassy recently discussing this very concept on an earnings call, calling it the future of e-commerce. For Rezolve, this was a watershed moment. They've been building their brainpowa large language model, or LLM, for this purpose since 2016. They see themselves as the established leader, the one who built the architecture while everyone else was just catching up. This is the story that has analysts at firms like Cantor Fitzgerald and Maxim Group placing aggressive price targets on the stock: $7, $12, even $15 per share. When investors see that, they think this must be the next big thing, a ground floor opportunity in AI, perhaps the next NVIDIA stock of e-commerce. But today's 17% collapse is the market shouting that the reality is something else entirely. The expectation of a future-proof first-mover platform is colliding with the reality of its post-SPAC balance sheet. Rezolve AI only came public in August 2024 through a merger with a blank check company, Armada Acquisition Corp. I. And as is often the case with these deals, the financial picture under the hood is not what the rosy projections promised. When you look at the company's recent financials, the numbers are almost hard to believe. We are not talking about a company with slowing growth, we are talking about a company with almost no revenue at all. Trailing 12-month revenue figures are in the low single-digit millions, and by some calculations, even lower. Yet the company is sustaining a market capitalization of over $1.2 billion. This creates a price-to-sales ratio that isn't just high, it's astronomical, into the thousands. This is a valuation that implies the company has already succeeded, not that it's just getting started. And all the while, it is burning through cash at an alarming rate, with negative net income in the hundreds of millions of dollars. This is the reality that is asserting itself today. The validation from Amazon's CEO was of a concept, not a validation of Rezolve's specific low-revenue platform. This is why the stock has been in a consistent downtrend, bleeding out for weeks. Today's drop is just the punctuation mark on a month that has seen the stock lose nearly 40% of its value. This kind of brutal, high-volume selling isn't just retail investors on the Robinhood app getting scared. This is a sign of institutional skepticism. The narrative is breaking. The company has been on a PR blitz to try and stem the tide, announcing the hiring of a former Microsoft executive to lead U.S. sales, and highlighting its recent acquisitions of Subsquid, a decentralized data platform, and SmartPay, a digital payments firm. This is all part of its strategy to build what it calls the backbone of the AI economy, a single integrated platform for AI, on-chain data, and digital payments. It's an ambitious plan, but it costs a lot of cash, and the market is questioning if the revenue will ever show up to support it. To add fuel to the fire, the post-SPAC volatility and sharp declines have, predictably, attracted shareholder lawsuit investigations from firms like Pomerantz, looking into claims on behalf of investors. This legal overhang only adds to the perceived risk, making it a toxic asset for any conservative investment strategy, like those managed by Fidelity Wealth Management or offered through Schwab Intelligent Portfolios. What we are witnessing is the classic high-risk, high-reward scenario that has become common in the post-2020 market, but amplified by the AI hype. This is not a stock for someone looking for investment help or a stable option for self-investing. This is a binary bet on a story. The volatility is a magnet for day traders, those using SoFi Active Investing or the Interactive Brokers trading platform, who see a 17% drop and a 52-week range of $1.07 to $8.45 and see an opportunity to scalp a quick profit. They see the volume, they see the analyst targets, and they place their bets. But for anyone building a long-term portfolio, this is a gamble of the highest order. The company is in a desperate race against time. Can its new U.S. sales team, led by the Microsoft alum, sign multi-million-dollar contracts with major retailers before the company's cash burn forces it to raise more capital? If they have to raise more capital, it will likely mean further share dilution, crushing existing shareholders. This isn't like buying Apple stock for its ecosystem or Tesla stock for its EV dominance. This is a bet on an idea that is currently costing far more than it earns. Let's be clear about what Rezolve actually does, or at least what it plans to do. Its brain commerce platform is designed to be an AI layer that sits on top of a retailer's existing website. Instead of a customer typing "red shoes size 10" into a search bar, they could theoretically use a natural language prompt like, "I'm going to a wedding in Miami next month and need some formal but comfortable shoes that will match a blue suit." The AI, brainpowa, is supposed to understand the intent, check the retailer's inventory, and provide a personalized recommendation. The company's acquisitions are meant to bolster this. SubSquid would provide the data infrastructure to process all this information, and SmartPay would allow the transaction to happen, perhaps even using digital assets. It's a cohesive vision. The problem is that many other companies, from small startups to giants like Google and Microsoft, are also working on this, and Rezolve, despite its first-mover claims, has not yet demonstrated that its solution is the one the market will actually pay for. So where does this leave the stock? The immediate future is perilous. The bull case rests entirely on the analyst targets and the Agentic Commerce narrative. Bulls believe that today's 17% drop is a massive overreaction, a capitulation event that marks the bottom. They believe the company's acquisitions and new sales leadership are the catalysts that will turn the tide, and a single major contract announcement will send the stock soaring back towards its $8.45 high and beyond towards those 15 targets. They are buying this dip, perhaps through their Fidelity brokerage or SoFi Invest account, believing they are getting a bargain. The bear case, which the market is siding with today, is that this is a fundamentally broken post-SPAC company. The bears see a valuation completely untethered from reality, a staggering cash burn rate, and a business model built on a buzzword. They see the ongoing shareholder investigations as a sign of more trouble to come. They believe the stock is heading back to its $1.07 low and that the company will ultimately fail to execute on its grand vision, becoming just another cautionary tale in the AI bubble. This is the tension at the heart of RZLV, a billion-dollar promise colliding with a near-zero revenue reality. I want to know what you all think. This is a very contentious name. Comment below. Do you believe Rezolve AI's Agentic Commerce is a real, defensible business model, or is it just a well-timed buzzword in a hot market? Ultimately, the story of Rezolve AI is a stark reminder of the difference between expectation and reality. The expectation, fueled by press releases and analyst optimism, is of a future-defining AI powerhouse. The reality, reflected in today's 17% market crash and the company's financial filings, is that of a speculative, cash-burning venture with a mountain to climb. The company is selling a dream of what e-commerce could be, but the market is demanding to see the receipts in the here and now. And today, the market's patience has clearly run out. Would you like me to find the latest SEC filings or institutional ownership data for Rezolve AI?